Hello again, and welcome to iGoldAdvisor.com. This is Christopher Aaron coming to you from September 6th, 2015. This is going to be an important video for anyone who has been in the gold and silver markets for less than the last 5 years, who at this point is pretty much guaranteed to be underwater on your investments. And for anyone who is maybe looking at this market from a long-term perspective, and maybe has yet to enter the market, this is going to be an important segment of analysis for you. Today we're going to be looking at the stages of a market cycle from a technical standpoint and applying this to gold and silver. And I'm borrowing this chart, thank you very much to Stan Weinstein and his excellent book, Secrets for Profiting in Bull and Bear Markets. I've studied a lot of technical analysis over the years, and this has been one of the most helpful books to me, in addition to probably some analysis on Japanese candlestick charting. But in this book, he outlines the 4 stages of a market cycle. You have stage 1, which is a bottoming or basing period, stage 2, which is a bull market, stage 3, which is a topping process, and stage 4, which is a bear market. Now, this seems pretty elementary at first when you look at it, but it's really important to keep in mind when you're evaluating markets and looking at individual securities within a market, because I can't tell you how easy it is to sometimes forget this basic stuff and to buy into a market that's right at the end of, let's say, stage 2 before a topping process. And one of the things that we want to do is make sure that we're really buying into stage 1 formations, because that's when you have the whole bull market, the whole stage 2 coming up in front of you. So let's dive right into it. We're going to look at gold and silver today, and this is the type of analysis that I do in my own investing, my own trading of these markets. And the reason why I focus on these indicators that I'm going to present today is because they're really the only things that work for me. Now, there may be other systems that work for other people, and that's fine. But for me, as an individual investor, these are the systems that work. Today, along with that stage analysis, we're going to be looking at trend lines. And just to bring up that chart that we've been over a few times here in the past, here is the gold market since 1980. Again, I'm not going to dwell on this for too long, but we have this long-term, multi-decade consolidation followed by a breakout, which is held above that breakout level at 850 for the last 5 years and is now in a bear market above that previous breakout point. Now, fundamentals matter. Absolutely. Fundamentals are what drives a market in the long run. The problem is you can't rely on the fundamentals to invest or to trade over anything in the intermediate or short term. So yeah, if you were willing to enter this market in 2011 and ride this out for the last 4 years, and then maybe ride this out for another few more years until you make a profit, that's fine. But if you're interested in entering a market at the appropriate stage, then I believe that trend analysis is one of the most important that you can look at. It's not to say that it doesn't matter, let's say, if China is importing more gold in a given year, or if the central banks are net purchasers or net sellers of gold for a given year. Of course that matters. The problem is that once you read that as a private investor, once you know about that news, the market has already priced it in. And then you therefore by definition are buying or selling after the move has taken place. And that's never good, because chances are the market's going to move against you after that point. So by understanding the fundamentals, but basing your timing and entry points on the technical analysis of the market, you can have the best of both worlds. So what I do is I break down my major long-term chart into smaller sections. So here's that same gold chart, this time since 2008. And you can see here that coming out of the crash of 2008, you had a multi-year bull market. This would be a stage 2 bull market. You then had about a year and a half topping process, and you've now been in a bear market, which is transitioning to that stage 1 again. And that's the important thing, the transition process that's going on right now. Now, I'm going to pull up a little key here to my charts, because if you follow my analysis for any period of time, you're going to get to learn the colors that I use for these various lines. And they are important because for me as an investor, I tend to be a very visual pattern investor. And anything that I can do to allow my eyes to focus on the trends that matter while ignoring the noise is a benefit to me. So if your mind works in the same way that mine does, that my mind works, you understand patterns, you understand the cyclical nature of markets, and you're looking for some analysis to really drill down into the shorter term time frames, I think my type of analysis will work for you. So in my type of analysis, what I do, again, here's gold back from 2008. Black lines always represent horizontal support and resistance lines. So your black lines, the most recent ones here were a long-term support around 1150 to 1175 that was hit 1, 2, 3, 4, 5 times before finally breaking down below that level here in 2015. So these black lines show you the important levels of support and resistance that have developed over the time frame that's shown on the chart. In this case, it's a 7-year chart, fairly decent amount of time. So these lines here are important to watch out for if you're buying or selling, because if you're buying at a level that has just been broken, chances are that that level is not going to be broken on the upside the first time that it attempts to. This represented here a lot of buyers in the market who bought here in 2013, bought again, bought in 2014, bought again in 2014, and what happened here in 2015? They failed to show up. The buyers were exhausted. And what happened was sellers then overwhelmed the market and it broke through this support level here. So by paying attention to these black lines, we're going to have a heads up as to important levels that we should be looking at. Some of the other lines to keep in mind, if you ever see a silver line, we're going to be looking at a Fibonacci retracement level. I'll get into those a little bit later. Those are not shown in this chart right now. But to go back here to the long-term chart, here are the silver lines. This is our Fibonacci, our 50% Fibonacci retracement level of the entire bull market. Fibonacci levels, I believe, are important for gauging long-term trends. I don't believe they work so well for shorter-term trends. So that's why I have them here on this chart of the whole bull market. But they basically give us a representation of the severity of the decline relative to the entire bull market, in this case being a 50% retracement. And these numbers are not arbitrary. They come from a study of an Italian mathematician, Fibonacci, who realized that these support and resistance levels occur an infinite number of times in nature itself, in things such as the patterns in sunflowers and in seashells, just to give 2 quick examples. These numbers represent the ratio at which that spiral folds in on itself or expands outward. And it just so happens that, well, markets are a function of nature because they're a function of human nature, which is part of nature. And so these ratios do work in with certain aspects of the market. Now, I mean, entire books have been written on that. I don't want to spend too much time on that right now, except to say that it works sometimes, so I include it in my analysis. To come here back to the key for the chart here for the last 7 years, some of the other important lines, if you see these magenta, this bright, almost pink, I use that to represent long-term trends. Okay, these are trends that have been going on for at least multiple years, sometimes longer. The blue lines here represent what I would call a primary intermediate term trend. This is a trend that's probably at least a year old, is fairly well defined, but almost always takes place within the context of a larger trend here, as shown in the magenta. So here we have our blue, our primary trend, and then within that you'll see this teal line here, which is really a short-term trend. Usually this is going to be less than a year. Sometimes it'll even be a few months or a few weeks. In this case, it's a little less than a year. So, and finally, as far as the trend lines, if you see these turquoise lines here, these always represent broken trend lines. Now, broken trend lines are still important to follow, even though they have been broken. In this case, the market broke to the downside of this multi-year channel after first breaking to the upside. So this would be known as a false breakout in technical analysis terms. And you then had, after the false breakout, a topping pattern which led to a legitimate downside break. So I do still follow these broken trend lines, and they're always going to be shown in this turquoise color. Now, I use these colors for a reason, because for me, as an investor, they help focus my attention in a way where I move from big picture to short-term picture. My mind sees these colors and I go, okay, what's the first thing that stands out? It's this bright pink. I then move to a shade of blue, and then a more faint green blue here. And so my eyes go from big to intermediate to short very easily. And then these lines I'm almost able to somewhat look over because of the color, the turquoise, while at the same time I'm paying attention to the horizontal support and resistance levels. So this is how it works for me, guys. If you follow my analysis, and by the way, I'm going to be posting these videos. I'm going to try to get these videos out about twice a week. And I see this as really important for the years going forward. I'm going to be doing this for the next several years, basically for the remainder of this bull market. That's going to be my goal. And I'm going to be zooming in to this market as time goes on. So watch how this goes. And if this helps you, please follow, please subscribe to my video. And if not, if this analysis doesn't help you whatsoever, bless you, move on to an analyst who provides something of better value for you. This is what works for me, and I know that I've shared this research with other people in the past who have found immense benefit from it. So that's why I'm presenting it here to you at this time. So let's zero in here. Here's gold from 2013 onward. Now, just to back up again, here we have that 7-year chart. Basically, the next chart, we're going to be zooming in on this primary trend here within the bear market. Okay? So boom, there that is. Now, the colors here are magnified. Okay? So this time, the long-term trend is again shown in this pink. The intermediate term trend is shown in the blue, and our broken trend lines are shown in the turquoise. It's just that everything has been magnified by one level here in this chart. So you can see here this primary trend, this long-term trend in the gold bear market that's been going on for a number of years. And you can see a really well-defined pattern here, guys. Now, gold is one of the most technical markets out of any that I have studied, and that's why I feel like this analysis is valuable. You can see here, for example, that in December of 2013, you had a bottoming, and you had this trend line that is shown in bright blue that developed over the course of almost a year. And what happened here in late 2014 is that this trend line was broken to the downside. And you had this whole choppy move down, choppy move up. And this move right back up here. Is it any coincidence that this point that gold got to almost a year later, let's call that 6 months later, matches this broken trend line that had been going on since late 2013? This is no coincidence. This market is very technical, and if you pay attention to these pivot points, these important trend line points, these horizontal trend line points, it'll give you a very good idea what to expect. And it sure would be better to have been buying down here in the lows than on this spike high, thinking this market was about to break higher. So if I can help any people out there with that kind of analysis, that's what I'm trying to do, to try to save you from buying at the wrong times. And let's try to accumulate down here in the lows. Now, no one can perfectly pick every top and every bottom with exact precision, but we can make some really good calls based on the technical patterns that are in play in this market. Now, what we have going on right now over the last year is you had this support again here around 1130 to 1140 that was tested 1, 2, 3, 4 times before breaking. This pattern here is a classic head and shoulders pattern, and that's another pattern that I use sometimes in conjunction with various trend lines, various resistance levels, trend analysis, to give more of a short-term target here. This head and shoulders pattern gives us a downside target of $990 an ounce. That hasn't been met yet. So that's something that I'm looking out for over, let's say, the next 1 to 3 months. Now, you can see that after we broke down here, we came back up. And is it any surprise that we hit this blue primary trend line here, which was hit once, twice, 3 times on the way down before breaking down, and it was now hit again. So this trend line is fairly important too. So for gold to bottom here and to start a next stage 2 bull market, what has to happen is this trend line has to be broken first. That'll probably happen somewhere down here. After that, various horizontal support lines have to be broken. And after that, this magenta trend line has to be broken. So all that is going to take some time. And for people who are just looking at this market and who have a decent time horizon, I think this is an excellent time to be monitoring the market with me and to be making some well-timed purchases for the next several years going forward. Not to be buying all at once on a perceived bottom from someone saying this is the absolute bottom, but to be buying going forward as this bottom is unfolding. And this bottom will unfold over the course of the next, I would say, 2 to 3 years. So you have some time, but then again, you don't have so much time. You don't have an infinite amount of time before this bottoms. But what I'm trying to do here is to provide a voice of reason against all those analysts out there who like to come out and say, here's the bottom, gold is going back up to 1,300 or 1,500, or it's making a new high above 2,000, let's say, in a year. To all those people out there, I just don't know what data they're looking at. I don't know what analysis they're looking at, because my charts here show that this has a series of trend lines that need to be broken, each of which, as you can see, tend to take multiple attempts to break through before you then start working on the next trend line, and then the next trend line, and then you start moving higher in a stage 2 bull market. So I'm here to help you sort through this, what can be sometimes chaos in attempting to navigate the precious metals markets here as they unfold. Now, one other thing I wanted to draw your attention to here, we've looked at this before in the past. This is gold relative to the CRB index just here over the last year. And you can see here what an outperformance by gold relative to a basket of commodities. So, yes, gold's still moving down, still in a bear market, but there looks to be some serious outperformance here that's come in as this last one or two parts of the bottom is forming. And that's exactly what we should expect to see. And that's good news for gold going forward, and especially for the mining companies going forward. A topic for another day. So let's zoom in again. Boom. Here is gold over the last 6 months. So we keep zooming it in, okay? Now, as a proxy for gold, I'm using the GLD fund, which has slightly different numbers here on the y-axis, but the trend remains pretty much the same. And this just helps me to chart for intraday data, because I can't get intraday data on this charting service that I use, which I really prefer sticking with because it very much helps me to identify these trends in a clear way. So anyway, I use the GLD fund. Now let's go back one more time. Here we have that, again, that primary trend line here from the beginning of the year, this downtrend with the head and shoulders pattern. Let's zoom in to that and look at the last few months of that downtrend. That's what we're looking at here. And to go even one more step closer, you can see this turquoise line, which again represents a broken trend line, which was a short-term a short-term uptrend within the context of this downtrend, this primary downtrend. So what this tells us is the short-term uptrend was broken, and for the time being, at least until proven otherwise, until this market perhaps breaks this trend line here for good, we are back in a downtrend for the next several weeks to take things one step at a time. So you can see what happens sometimes is we have these false breakouts, as happened here toward the middle or later part of August. And technical analysis is definitely one part science, one part art. So you have to be aware, once you learn, I've been studying the gold market here for over a decade, and I've learned that these trend lines are often exceeded for a short period of time before falling back down very dramatically. So you have to build in some leeway to your trend analysis as you're doing that. Some analysts use a period of 3 days. They like to see a support line broken for 3 days. I use some other indicators that I will have to get into another time to tell me whether or not a breakout is a true breakout or a false breakout in this case. Now, false breakouts, unfortunately, tend to indicate more weakness, some more serious weakness coming up. So I'm looking for some more weakness here in the gold market over the next several weeks, which may be approaching the final bottom, and that's what we're looking for. So again, here's this primary degree decline, and what we like to then do in this form of analysis is zoom it back out after we've gone all the way in, so that we don't become so myopic as to lose track of what this is. This is a short-term downtrend within a longer-term downtrend within a 50% bull market retracement. So we want to remember that this downtrend here is very much lessening in its slope compared to the initial downtrend that we had here, compared to the long-term downtrend. This is how bottoms form. You have a steep downtrend followed by a lesser downtrend, and then we'll be looking for something that is moving horizontal for a period of time before we head back up. This, again, in context of a bull market that has stayed above its previous all-time high for the last 5 years. And that tends to be very, very significant, as we went into in our presentation from a couple days ago. So there you have the gold market, guys. That's how I analyze it. And I was going to do silver in this video too. I think what I'm going to do is continue on with that right now, because I have a feeling the people who are interested in gold are also going to be very interested in silver. So we'll continue on. We'll see how long, how many people stay with us here for this type of analysis. Moving on to silver. Here you have silver since 1980. You have a silver market that looks very much like gold did in 2007. This long, multi-decade consolidation, and now silver has gotten back up to that consolidation. And here's the current bear market that we're in. My sense of it is that next time silver attempts to break above 50, it will hold above 50, in the same way that gold, after it broke above 850, held above 850. So here we have silver over the last 10 years. We're doing the exact same thing that we did with gold. Let's bring up that key again. Exact same thing, exact same way that we're analyzing it. And so here we're looking at all these horizontal support levels. Silver, again, is a very technical market. You could see this very long-term magenta trend line here that's just about to be hit. You can see these broken trend lines on the way down. Significant, because as a market bottoms, it will break downtrend lines. So that shows you that the steepness of the correction is lessening. Here again, you have this primary, less steep downtrend line that we're in right now. And let's zoom in here again and look at these last 2 years now. So what we're looking at is this, what was shown in blue here. We're now relabeling that in pink, and we're showing the downtrend line that we're currently in blue. We're zooming in one level. Okay, so silver, moving a little bit closer to the present here, has just completed a similar head and shoulder pattern, which has a target of about 1250. So that target hasn't been hit yet. I'm watching for that target here over the next several weeks. You're talking a market that's already come down from close to $50 down to, where are we today, $14.50. So the bulk of the damage has been done, is my point. And we are entering a bottoming process for this market. So whether or not this market continues and does meet this target here of 1250, or let's say the absolute low has been put in, you are now looking at a market that is going to need to, just like gold, break through a series of resistance lines here, this downtrend followed by this downtrend, before it then resumes the next uptrend. So we're watching for this. We're watching it unfold right now in real time, and I'll be bringing this to you every week at a bare minimum, again, as this unfolds. We can watch it unfold together. It's going to be pretty exciting when the next stage of the bull market begins. Zoom in a little further. Here again, we're using the SLV fund for intraday data, and we can see this, what we're now calling on this short-term chart, the primary downtrend, which corresponds with this primary downtrend right here. So this will have to be broken before we can talk about any of those other levels. Now, interestingly, this downtrend here, the initial downtrend from the May high, was broken. So that's important. That's important to look at. And now we're talking about a less steep downtrend line that's in play. So again, just like in gold, what I like to do is not get too lost in the weeds and boom, back it out again. So we see, okay, right, we're looking at besting this primary degree downtrend line, paying attention to a head and shoulders formation, and we're looking for that to happen here in the next several weeks to several months. And from there, boom, out again, we can say this would then be ready to start moving higher, maybe into this 1850 range. Once that's broken, we're going to be looking for this 25 range. And that'll be unfolding as this bottoming process rounds out here over the next several months to maybe a year or two. That's my prediction at this time. And again, all the way back out to look at what we're really talking about here. We're talking about a market that has not even broken above its 1980 high as gold has. So what I'm saying is there's a lot of value here in silver relative to gold if you think this bull market has another leg to go. I do. If you share that viewpoint, there's a lot of value here to look into silver because it basically needs to triple just to get to this 1980 peak, let alone what gold did, which is to double above that 1980 peak. Sorry about that little glitch there. To double above that 1980 peak represents a tremendous percentage gain here in silver that I expect to unfold as gold resumes its next bull market in the next several years. So in summary, guys, I know this has been a lot of charts. Thanks for sticking through to the end. If you've made it this far, you must be very interested in these markets, and maybe you've already done a lot of the fundamental research on it, and you're looking for someone to help guide you through this technical aspect, and that's what I'm trying to do. So again, in summary, we're watching these bottoms forming. It's a process that takes time. This time represents an ideal period for accumulation of precious metals or the establishment of a new position. So for gold, we're looking at that major trend line, the Fibonacci lines, the previous all-time high, all of which converges here in this 850 to 1030 region. We're looking to see if that holds here over the next couple months. And we have a head and shoulders target of 990. So this area represents a very interesting confluence, which I have a strong feeling may represent the final low for this move. It may be in already, and if so, we will know. We will be watching it unfold. This is my hunch at this time. And then for silver, we have getting really close to that $14 support level, this long-term trend line from the beginning of the bull market in 2003. We're watching for that, and we're watching for a target of 1250 based on that most recent head and shoulders pattern. Thanks for joining me again, guys. If you like this analysis, please subscribe to my channel. Feel free to share this with anyone who may find this of interest. And if you are interested in going to my website, I do have a free report out right now that covers some of the most profitable gold mining companies that I expect to outperform during the next leg of this bull market. I'm going to be releasing some paid reports on some of the smaller tier companies that are more risky. So for the free analysis, I'm giving away my top 5 picks for the most safe and best performing large cap miners out there right now. Feel free to go check that out. Thanks again for joining me, guys. I will see you next time.